Yeah.
Hey everybody, great to be here. Thank you so much for joining us as we talk about scaling. Firstly, I'm going to start with some introductions. Let's start with PJ. Tell us a bit about yourself and your company, and then we'll get into our other speaker, Michael.
Yeah, great to be here back in Copenhagen and at TechBBQ, a really amazing event. I'm a general partner with Northzone, which is a venture capital investor. We've been at it for almost 30 years and currently investing out of a 1.1 billion euro fund and have backed many of the most iconic companies coming out of Europe like Spotify, Klarna, and others. And we've also opened up ourselves to investing not only in Europe but also in the US, where I opened up our office about 10 years ago. Yeah, that's us.
Great. Go for it, Michael.
Hello, everyone. I'm Michael. It's great to be here at TechBBQ. I'm the founder and the CEO of Compass Bank, a Danish SME-focused neobank with, let's say, a European outlook. It's great to be here.
Great, fantastic. And I know when we go to these events, invariably we have these discussions about, Europe is left behind when it comes to innovation and skills and competitiveness. But we're going to flip this because we want to have a different discussion, which I think is a little bit underrepresented in this space. So firstly, I'm going to start with why is it the best time to build a company out of Europe?
Well, I can start with that.
First,
If you have a little perspective on the venture and the tech and the entrepreneurial ecosystem, it's nowhere near as tough today as it was only 10 years ago to build a startup. You have the tools that you can get off the ground with a lot less capital required. You have everything from cloud services to app stores, etc. That makes your distribution a completely different challenge than just in the past. If you go to any business school or engineering school today and ask what would you like to do, chances is that probably 50% of the class will say, I want to be an entrepreneur.
Yeah.
20 years ago, that would be close to 0%. So that's a huge difference. And the third thing I would say that's also a massive difference is that we have a complete capital ecosystem from early seed and business angel networks up until late stage of financing. And if you actually see the outcomes in Europe, we do on a per capita basis create as many unicorns per capita in Europe as they do in the US. So it's we should not sort of beat ourselves down. We should actually see what we can do even better because we could do a lot better.
Awesome.
We could, and we definitely should. Compass Bank is built to assist in that ecosystem as well. I think one of the main arguments to start a company now is that you have the tools that PJ was talking about, which is readily available. Clearly a massive change from just 5 years ago. But what I would say, those tools are not just for you to start quickly and small, but it takes away some of the key ingredients that you needed to succeed just 5 or 10 years ago, where access to massive amounts of capital, if you wanted to scale quickly, was a necessity. I don't think that is the case anymore. You can actually scale a lot from very little access to capital. You still need it, probably, if you want to move forward. But the change in the market and the change in the dynamics of how you can actually get your product out is very, very different. And I think that's probably one of the major reasons why I would encourage, especially young people with an untroubled mindset, so to speak, to test it out, right? Yeah. With very little risk.
Absolutely. And I forgot to mention, if anyone would like to ask questions, obviously we have Slido. Please feel free to do that. We will leave a bit of time at the end so that we can answer those. So don't be shy. Question for Michael. Now, we had a little bit of discussion earlier. You've said that regulation can be a moat in most sectors, like fintechs. But how do you flip this into a competitive edge?
Well, regulation and compliance obviously has had a lot of headlines in the last 10 to 15 years, especially in finance. And it's gotten a bad reputation, maybe sometimes for good reason, but not purely for good reason. I think there is a chance or an opportunity to take the compliance and the regulatory requirements that you are faced with in any industry. We just saw the space industry, which is also heavily regulated. But taking those requirements and taking those compliance issues that you have and turning them into a competitive edge. What do I mean by that? Well, it's not going away. Clearly it's coming. And then instead of seeing it as a necessary evil, then trying to flip it around and ask if your customers can be part of that journey. That goes specifically into talking about onboarding journeys, about ongoing monitoring, ongoing conversations with your customers. So the compliance and regulation that you are forced to do can actually be turned into a closer relationship with your customer. So you can use those touch points to actually interact more deeply with your customer. And I think that's probably one of the key things that where you can try and flip something that is, in my opinion, mistakenly seen as a cost center and flip it into at least a neutral center, if not a profit center.
Yeah, amazing. And likewise, PJ, how do you think about regulation? Like, is it sort of a way to separate the most resilient companies, or is it really just a pain point that is a hurdle for getting investment?
Well, I kind of resent the idea that you can have a one opinion about regulation.
Yeah.
You know, I think you should have an opinion about specific regulation. I must say that, for instance, the GDPR regulation is probably one of the dumbest regulations ever made. It was actually made of the purpose of protecting us consumers from being, it's like our data would be exploited. What it did, now it didn't protect that, it protected Facebook and Google. And that was not the idea. So it was like regulation is very good in the financial industry when, you know, people can be taken advantage of, and, you know, they can be put into, you know, severe financial difficulties unless there had been strong regulation. And for that perspective, I think what we are currently in a discussion around is, for instance, the AI regulation. And I think for a while it looked really, really dark here, where we were starting to regulate stuff that we didn't actually know where it was going. And that put the entire European tech ecosystem addressing the AI opportunity on the back foot, and basically relinquishing that opportunity entirely to the US and to China. And I think we have an awakening in the regulatory bodies that could happen, and that's why it's now being sort of rewritten, I think, as we speak.
Yeah. And when I think of your firm, I guess, you've basically backed significant unicorns, you know, and they in turn have created the flywheel effect of creating their own spin-outs, and you know, people have you know, left the employment inside their own companies. And I guess this kind of startup mafia idea, which I kind of really like, what role does community and mentorship play in sort of facilitating this and making it really have that traction?
I'm not sure I understood the question. Yeah.
But maybe you can tell us a little bit about the spin-out effect that we've seen in the Nordics with some of your portfolio companies.
So we the ecosystem that has emerged from like the big platform companies, say like Spotify, Klarna, and many others, has I think currently the count is something around 80 companies for Klarna and the similar amount for Spotify, with new startups that have come out and started to address new customer problems, and predominantly with this new emerging tech stack that you can, you know, label AI or generative AI. And that change is very powerful, because it both attracts talent from not only the sort of the Stockholm region, but from elsewhere and also internationally. And it also attracts quite a lot of capital. And it probably hasn't escaped anyone that there has been some phenomenal funding rounds in AI companies in Stockholm over the past 6 to 12 months. And it's largely a result of this second or third generation founders that are coming in and actually identifying the top talents that are finding new problems to solve with new technology. And then you have the Lovables, the Tandems, the Legoras, etc., that are coming up onto the scene. But it takes a long time. You know, Stockholm has been a tech ecosystem for almost 30 years. And if you go back to how it is in the Bay Area, they have been at it for 60, 70 years. So we are catching up. And I think it's not only Stockholm. This is happening in Berlin, in Copenhagen, and in Paris, specifically with the AI. And naturally, London has been a strong ecosystem for quite some time.
Yeah. Well, and I think it's these ecosystems is absolutely crucial because it compounds knowledge. If you have to start all over again, everybody knows that when you have to do something, it's much easier to write on a piece of paper that everybody else has given their first stab at. But if you have to start from scratch, it takes a lot more effort. So we can reduce the effort and the knowledge that is needed to create a successful company through these ecosystems. And when you add to that the tools now available that was not available 5 years ago, and the speed and compounding effect of that, you're having at least part of the ingredients to actually have a tremendous successful Europe in the next 10 years, where the compounding effects of successful founders teach each other, which is something that is not necessarily you can take for granted at all. And the second is you get access to tools that makes you start at a lower pace in terms of capital, which is another area where Europe in general has been behind the curve against the United States. So when you take out the competitive edge from the United States and try and looking at Europe in that capacity, I do believe the next 10 years we could, with a bit of luck and a ton of hard work, we could be looking into a very, very different scene that we have been in the past. And I think the fact that we are getting stuff like TechBBQ up and running and we're seeing these things operate in a much more efficient way, that is part of that ecosystem that you can contribute to that. And you continue to show up and you continue to do the hard work. It doesn't come by itself, unfortunately. We all want that, but it just doesn't. It takes many years and a lot of sweat.
Yeah. Maybe you could tell us a bit about how, as a company, you know, you're a local successful company, how you've approached growth and what have been the markers that have really been enabled you to do that?
Well, it's a great question. Thank you for that. We launched in 21. Well, we got the bank license in 21, meaning that we actually started the company in 18, and it took a couple of years to get the bank license. So we were doing this in the middle of Corona, where we needed to figure out a new way of working.
Yeah.
Do we work together? Do we work at home? How do you do that? How do you set requirements? How do you create accountability? How do you make sure that you have the right amount of tasks for people to do when you can't see them every day? And at the same time, you saw just in the middle of Corona, the capital markets tanked big time, which made it very, very difficult to raise money, followed by an extreme excessive period where it was easier to raise money. And all of that needed to compound into a meaningful growth trajectory for Compass Bank. And for us, we've never been of the philosophy or the methodology that, you know, you need to blitz scale. So you grow at all costs and you figure out a way to solve whatever issues you come with afterwards. That I find very admirable in certain software companies where you can do that. But when you are in either a space company like before, or you are in a regulated financial institution, you can't just go out and then you talk to the other things afterwards, because either it costs you your license to operate, or maybe even lives if you're talking about space, right?
Yeah.
So you need to find that approach where what is cost or growth at all costs versus sustainable growth, that where you try to balance it out, because going too slow is not going to get anybody turned on, right? You know that. We need to have people turned on, both, you know, mentally and in their presence. And you do that by balancing it out a little bit, which for us has been to balance it on a capital basis, because we are a regulated bank. So we have been running quite close to the edge on capital, then being able to raise more capital and then continue our growth. And then at the same time, adding new products that can create new revenue streams. which at the same time locks in the customer in a meaningful way. And I'm not saying it's a blueprint for everybody, and it's difficult, but
yeah, it's
can
good
be done.
insights though. I mean, we haven't, obviously so far in our discussion, we haven't gone all in on AI because, it's so ubiquitous, we could do everything about AI, and I know a lot of us are kind of, waiting for the reckonings with AI, but there's one thing that I think we were sort of talking about in our prep discussion that doesn't get talked about, which is security in AI. It's kind of an area that's quite untapped in terms of investment, but also in terms of the practicalities of use as a company. Is there either of you like to share some thoughts around this?
Well, I think the AI revolution has lots of promise in, and I do think that we will see a number of companies not only addressing sort of the tool sets themselves and maybe improve the work processes for their customers. I think what will come as the next phase is companies that are built entirely on an AI tech stack that are replacing traditional companies that at best became digital. And we saw that in early 2010 and around that. That's when the first generation of neobanks came to the market, because they were basically taking the digital, let's say, the digital stack and making a much more efficient and effective and customer-centric bank. And currently, the most valuable banks in the world are neobanks. And I think that's happening in one sector after the other over the next 10 years, fueled by this new sort of capability that we can call generative AI. However, it rests on a very, very important assumption coming to your question, and it's that it is actually secure and safe. You don't know that your data is safe at this point in time. I think we will probably see some major disaster on major data leaks that are coming out of, let's say, that people just don't have control over the AI infrastructure. And that will be a sobering element, and I think it will also give birth to a new set of companies that are working with security and safety as their prime value propositions.
Mm. And likewise, you're in a heavily regulated industry. How do you balance it?
It's difficult.
Yeah.
I won't lie. We feel that if we don't utilize AI in a meaningful way on a daily basis in the individual teams and with the individual employees, we are left behind.
Yeah.
So I don't think it's possible to run any successful company, especially not with the people out here, without having a meaningful access to that, without having a structured approach to it. We've done it in Compass Bank by allowing people to use specific large language models and additional tools, and we've done that with the collaboration with the specific providers of that in an environment where we know our data is supposed to be very secure. Mm. However, it is supposed to be secure, and we've taken every measure that we can think of to make sure it is secure. But what happens if things blow up, right? And that is the dangerous part here, because let's say we don't want to take that risk. Okay, then at least we won't be part of that blow up. But on the other hand, everybody uses cloud anyway, or you use Microsoft services, you use Google services. So you are in that environment anyway. You are in there somehow, right? So it's a matter of finding a way to try to close the loops as much as you can by cooperating with the different providers, which is what we've done, and then hoping and creating processes and risk policies that effectively minimizes the blast radius when it comes, because it's probably going to come at some point, right?
Yeah.
But the risk here is not whether you want to be part of that blast radius or not, but whether if you are not in it, what then? What is the risk? What is the true cost of being left behind?
Yeah.
That is not that easy, right?
Yeah, that's a real reckoning for a lot of traditional industries, right?
Yeah.
Yeah. All right, look, we've got loads of questions up here, so I'm going to jump in with some of them. I apologize if we're a little disjointed with the flow, but I think they're good questions, so let's do it. All right. What is your opinion on venture studios in Europe? Can we successfully replicate the model?
So venture studios have been tried a number of times, and I actually built one myself back in...
Venture studio, maybe let's start with that, in
yeah,
case anyone doesn't know.
a venture studio is basically where you build your idea and put people together yourself in order to sort of address a market opportunity. The idea is that it's you could do it capital efficiently, and you get a high ownership, and you can sort of collect talent that is needed. For some type of businesses, I think that works really, really well. For more like complex and complicated problems, I think it probably does not really cut it. Because one of the reasons being that that in order to build something that is truly differentiated, you probably need access to capital, and you probably need to make sure that you build a product for quite some time before you hit the market, and that means that you have to rely on people like me. And we are less likely to invest in a venture studio company until it has reached sort of escape velocity. So if you're building something like a Spotify or Klarna or something like that, I don't think you should do that from a venture studio. You should probably take the more traditional route.
Did you have any involvement in venture studios or anything similar in your work? Were you involved in anything like that in your work?
No, we took the hard-beaten way of raising money ourselves throughout the years, and managed to do it in meaningful clips along the way.
Okay, great. All right, let's see what we got. Interesting. Geopolitical, apologies, I'll read it out. Geopolitical trends suggest that more euros will be spent than dollars on strategic industries in the coming decade. How can startups take advantage?
Well, I think that is a super cool question, actually, and very relevant.
Really good question.
Especially now that we are looking at right now there's a massive. I can use the word trend, but I would rather use the word uncertainty around where's dollars placed in the world at the moment, and not just the valuation of dollars, but also where does it actually fit, and where does it move in different capital and liquidity streams. Euros are likely being used in a higher level, which seems to be okay. I haven't seen the statistics on that, but it could be right. I would say startups could probably take a lot of advantage in the stablecoin and blockchain industry, where the flows are in a different way, where totally. you can take out many of the uncertainty around everything from T+2 or 3 in terms of how banks and payment companies in general, how they flow money around. So I think probably in that area, those are the industries that I think is the most prone in the currencies to grow the most in the next 5 to 10 years.
Yeah, super interesting.
I do think that Europe has this fortunate confluence of two very strong trends right now that may not last, but I think for now at least, we have, due to the US having a much stricter immigration policy, quite a significant part of the talent that you had as an almost immediate thought that I need to go to the US to set up my or to join a startup. So they are not as prone to do that as they did just a year ago. Second thing is that the capital flows have actually turned towards Europe, and that is a proof. And you can see it in all the statistics. And we, as venture investors, we also get a lot of investor inquiries about, can we get involved in the venture ecosystem? And there's a tremendous increase of interest into the European ecosystem. So the combination of capital and talent, and if you actually, abstract it down to the most important thing, it's actually not companies raising capital, it's talent that is raising capital, formed around companies, and that will at some point build tremendous businesses that are hopefully generational. And we have shown as I said in the statistics earlier, that we can produce as many unicorns per capita as the US, even with not having a level playing field as we had in the past. So I think we're extremely well positioned to do it going forward.
Yeah, amazing. All right, gosh, so many good questions. We have a lot of people talking about regulation, which is interesting. Let's pick one. Do regulators and legislators need to think like product teams to make sure they don't rise to the challenges faced by society in the face of emerging tech stacks?
Oh, well, I would...
Does anyone want to have a go?
So the question is, do regulators and legislators need to think like product teams and make sure they rise to the challenges faced by society in the face of emerging tech stocks? That would be great, wouldn't it? I don't think that legislation is supposed to think like product teams. I think they're supposed to think in terms of frameworks and in terms of policies, and then basically leave the entrepreneurs to figure out how to operate within those frameworks. I would be very hesitant to ask regulators and legislators to think like product teams. Not that it's not a good idea, but we could reasonably ask ourselves the question, what is the odds of success, and what are the odds that this can actually be implemented across many different European jurisdictions without creating unrealistic advantages for one country over another? But even if it does, I guess some of the others would then have to get back on the horse. But I would say if they can create the framework and then maybe step back a little bit and allow entrepreneurs to work within that. I think PJ talked about the GDPR legislation earlier, where it came from a good heart, but it ended up with a very, very heavy heart, so to speak. And I thought that was a very, very strong example of where I think a framework should be completed and then stepping back and allowing people to operate within it.
And I think again, going back to where the purpose of regulation, if you remember, there was probably in most countries across Europe a conversation on like, it's stupid that they're trying to regulate how a banana could look like. But it wasn't that stupid, because it was a way to make sure that the market functioned and that you had a pricing mechanism that actually corresponded to the idea of a banana. And when you're regulating in order to create a more functioning market, those regulations are extremely helpful, I think, for everyone. But when you're like try to anticipate problems like what was about to happen with the AI regulation and say that, oh, people will get hurt, or stuff will happen, and so we put in like almost like a prophylactic type of regulatory environment, that is bound to fail. And I don't think that a product mindset could help that even. It's, as you say, it's a framework of why do we regulate? It's to protect people when you see that there is concrete harm being done, and also to make sure that the markets function better. That's why we have regulated stock markets, so we don't have insider trading. That's because someone will be hurt if there is insider trading, right?
One of the questions is around, is there examples where Europe has been a leader in quickly assessing the need for regulation in the startup space? Have we been front runners in any particular legislation in this space?
Unfortunately, yes.
Yeah?
I'm sorry, I didn't see the question.
Yeah, it's the third one, number 3.
No, I have not seen that.
Yourself? Anything?
No, I think that it's like, in a way, it's weird when I would be going to a US based conference setting like this. I don't think we would be talking about regulations at all.
Yeah, it's an interesting one.
And that's like, it's a fucked up mindset, I think.
Yeah. All right. As a startup, getting access to loans is harder than equity investment. Will this risk appetite change going forward to give SMEs more financial options than now? Maybe Michael, you have some thoughts with this initially?
Definitely have thoughts on that.
Excellent. That's what we want.
I fully understand the question.
Yeah.
It actually comes down to economics. There's a reason why certain banks, including Compass Bank to a certain extent, believe that an equity is a better product for your capital stack than debt would be. I do understand the need for it, and I definitely think that venture debt is something that we could grow in a more meaningful way in Europe. But by and large, super young companies are probably much better equipped, or it would be better for them to take on equity from either ventures or something else, where they share the ownership and do not have the pressure of a bank breathing down their neck around, you need to pay your monthly interest rates and you need to do this and that. Because from a bank, we have to say, if we were to loan money to a very new startup, we would probably have to take the write down immediately from the entire company.
Yeah.
And that means it becomes very uneconomical for us to do that. However, having said that, we would be more than happy to assist in a structured format for around venture debt, which is very different. So we can use our skill sets and our technology to help build that ecosystem. But to do that successfully, I think you need to do it in tandem with the equity piece, because that's really what they truly need. Someone who understands the equity and the upside of equity and can maybe even support in certain decisions that comes along the way, which is where an experienced investor, maybe like North Zone and PJ, could come in and actually assist them in a much more better way.
All right. I think we've covered a broad amount of topics. Obviously, we could have talked for another half an hour, I reckon. Thank you so much, everyone, for chatting with us, and enjoy the rest of the conference. Thank you.
Thank you.